Okay, ladies and gentlemen, thank you very much. I congratulate those of you who have the perspicacity to remain, because this is, in my view, the most important session you're going to hear today. My name's Bob Thompson. I'm what is pejoratively known as a management consultant. So I've borrowed my friend Ken's watch, whom I'm actually going to tell him the time when he asked me. We have a presentation to begin with. So this is Clemens Trautmann. Can you introduce yourselves and then carry on?
Sure, it's a pleasure. Thanks for joining us for this panel on digitization of the German real estate market, which actually ties in perfectly in the discussion we had earlier in the logistics part and in the retail part. I myself serve as CFO of Immonet, which is a generalist real estate portal, in one of the leading portals in Germany. Many of you are familiar with it probably. And actually we are two imposters here on the stage we have discovered earlier. I'm in the program as a CEO, and so is Ken. You'll probably introduce yourself later. So we are the two imposters here, and thanks for bearing with us. As for myself, I'm from the media industry. We are here with a topic at the interface of new media and real estate. And this industry has undergone a tremendous change and transition, and even more so than the world of real estate, which is more or less resilient to change. And if you just step back 1 second and try to remember the times when an application was still for employment, when a hard drive was a long trip on the road, or when a keyboard was a piano, and when you unzipped anything in public, you'd probably go to jail. When you remember these times, you see that digitization has completely changed our worldview. So we're trying to explore our subject in 5 steps, and there's one underlying issue, which is market efficiency and transparency. The first part refers to the change in media usage. The second is going to explore the benefits of a generalist platform. And we're going to talk about some challenges, which a survey which we conducted reveals. And then we're going to talk about the efficiency that can be brought about by strategic alliances and the higher transparency, which can fully unlock market potential here. You see that we have had an evolution of devices. This is the left-hand column. And this evolution of devices has more or less followed Ripple's law. Ripple's law says that a new medium never completely substitutes, eradicates, replaces the other, but is just another layer on top. So all these mediums, which you can see there from the 1980s to 2010, are still being used. And you can also still see that the conventional customer journey in search and negotiation processes is still quite common. But what is remarkable, you see the majority of dots and arrows is the lower end. And you can also see what we media guys refer to as a SOLOMO pattern: social, mobile, and local. All or most searches are done on mobile devices with local reference, even sometimes with augmented reality. Negotiation, first contact is done through social media, and this change in customer behavior on the negotiation process side is quite remarkable, and you see basically an evolution of channels and a revolution of usage. And let's see how this translates onto property portals. See the demand side on the left side and the supply side, the right-hand corner. And what is remarkable here, one might assume that the internet is at a pretty mature stage, or has been at a pretty mature stage already in 2009. We still see a big leap here that the visits on German leading property portals have tripled in the past 4 years. And also on the supply side, on the property side, you see the same leap in proportion. One thing is lacking, though. We have, regarding to these properties, we have full transparency. By the way, of these 1.5 million properties on Immonet, 90,000 approximately are commercial. We have full transparency. Still, according to our estimates, about 50% of the market is intransparent, and so they are not advertised on public portals, and they're marketed through direct search, recommendation, or word of mouth. Let's see how Immonet has positioned itself and secured its share in this dynamic environment. Immonet is one of the leading estate portals with 5.2 million unique users and 24K commercial customers. And the key to success is probably the huge network in the Axel Springer group and the Axel Springer Digital Classifieds group, with sister companies being Siloger, ImmoWeb in Belgium, and Stepstone Group for job classifieds. So there's the best practice sharing, and there's of course also the huge reach of this network, and this huge reach enables us to offer cross-media marketing solutions which are tailored to our customer and have over the time generated a high brand awareness. We are at the challenge now to further grow our company, and we believe that the key is diversification, horizontal diversification as well as vertical diversification. And each of these fields that you see there, with residential real estate, B2C residential real estate being our core business, each of these fields we have 3 different options for. Do it ourselves, do it with strategic partners, or do it through acquisitions. A case where we did an acquisition was the removal service. So one of our subsidiaries, Umzugsauktion.de. Interestingly, we just touched upon the auction model, which we'll talk about a little later with Ken at Auction.com. So we have an auction model for removal services, and we are also bringing our customers IT solutions, real estate software, our Immonet Manager, and we're looking at going deeper in processes and the value chain of our customers by providing state-of-the-art IT solutions. We've also looked at the field of investment real estate, and this is a case where we deliberately decided not to do it ourselves. As a generalist portal, we wouldn't have the complete competence in this field, but we decided to join forces with Asset Profiler, and Norman will talk about this a little later. In the specific field of investment property, we have conducted a study together, a survey, which reveals, not surprisingly, but still remarkably, many inefficiencies and a substantial degree of intransparency. If you ask the question how investors evaluate market efficiency, you get a little better results than on the supplier sides, but overall it's still disappointing. Also, if you ask what share of investors believed that the property they found matched their criteria, it was just 1/3, just 1/3 with the whole technical means behind it. Having said that, one should note that this doesn't specifically refer to online marketing of property, but to all channels and mediums of property marketing. And the last point is also when you ask how often property was already sold when someone proclaimed interest, and there was also a relatively high and disappointing number.
And that brings us directly to the next question that was set and asked in that study regarding the market potential. And I think no wonder, no surprise for you, the market potential is not fully exploited yet. Why is that the case? Because many investments are found through personal contacts. You can see that the companies 2011, from 100 investments they planned, only 70 really could be executed. Same thing in 2012, a bit improved from 70 to 72, but still a high gap between how much money could have been spent and how in the end was actually spent. What are those reasons for that? 2/3 of the sellers spend extremely much time only for searching investments but not finding them. Why is that so? 2/3 of the offers do not match the search profiles. Many search profiles are outdated. People don't find each other on the German market. Now, what is the conclusion we can draw from this? The German market needs more transparency, I think, and I know from my experience from the English market, respectively English market players active on the German market, that they always complain about the lack of transparency and that German market players always make a big secret of what they are looking for to invest in or what they are selling. Now, how can we solve this? Actually, what impressed me very much today was the keynote speech of Professor Reibling, teaching us about those different types of bias men are governed by. Well, men and women as well, but men mostly, as we're mostly men here. Especially those ones towards women. To be honest, I know that no one of you has ever used a dating platform. Funnily, everybody knows how dating platforms work. In order to bring you in that dating mood, I would like to show you a little movie we have made on dating platforms.
Asset Profiler. Loving real estate made easy. This is Ian Investor. He wants to invest his money in property. This is Sarah Seller. She's inherited a large commercial property which she'd like to sell quickly and efficiently. Sarah and Ian are open to everything. But when it comes to investments, they're rather reserved. A private platform is advantageous not only for Sarah and Ian. As everyone knows, private investment platforms are definitely more suitable than public ones. For Sarah, it's important that initially no one can see her intention to sell. Sarah is not one of those girls. She decides for herself what information to give, when, and to whom. Ian would like to make targeted investments. And he's not alone. Many investors are looking for a suitable property. In order to protect the secret of his success, Ian has placed a detailed requirement profile in his private Asset Profiler account. Now Asset Profiler's intelligent matching system finds the perfect fit. All of Ian's criteria are marked with scoring points, which are analysed and evaluated. Ian cannot see Sarah's property yet, but the two appear to be a good match. 87% similarity. Well, you can't have everything. Ian has been checking the open platforms for years, but without success. With Asset Profiler, he seems to have found the object of his desire. Sarah can already see that Ian is the right one, so she drops all her defences and reveals all the relevant information. For Ian, it's love at first click. A bombshell like Sarah's property would never have dared to go on a public platform. Well, that was easy, discreet and direct. Asset Profiler, the platform for investment professionals.
We now know that we can not only love people, we can also love real estate. And I hope you're in the perfect mood for tonight's party, which might not give you the date for lifetime or 37 years, as we've heard earlier this day, but maybe for the night. Anyways, how does Asset Profiler work? How did we transfer this dating platform functionality to the real estate market? To make it quite short, as a vendor, if you're registered to the platform, if you have gotten admission to the platform, you can put in your property data. The matching is started. You will see a matching list, which companies, which investment, private funds or family offices or banking funds match with your property before anyone else can see your personal data or your property data, and then you decide whom to offer your property or not to offer the property, withdraw from the market, and nobody has seen anything from you. The other way around works just as well. As an investor, you can create an investment profile, you will get the perfect matches, you can ask directly and very discreetly and confidentially for a matching property which really matches with your profile, not something else that is completely off your focus. In the matching, you have a very detailed analysis showing in green, yellow, and red what are the matching factors, which are the factors which are not matching as much, and of course the red ones as well. It's a scoring system behind this, so it doesn't have to be 100% match between the property and sale and your investment profile. A 75% and 92% is fine as well, and this detailed analysis will show you what the differences are. Why are we doing this? Because it enables you to get off-market deals on the German market. It brings you a high amount of quality, not quantity. Properties that really match your requirements, not the garbage you've seen so many times already. It brings you more safe transactions. You save transaction time in the process, of course. It's a closed marketplace, which is very beneficial for the fact that whom you meet really can deliver. You can maximize the conditions, of course, to your own advantage, and receive a very, very good market penetration when entering a market. So now I have to pass on to Clemens again for the bubbles. Not that you're empty bubble speaking, but
thanks, Norman. Our common goal is to heighten the transparency in the German market, to facilitate also cross-border transaction, and the best way, the best setup to do this, we believe, is a combination of three components: an open marketplace, a closed platform, and a high-quality content and analysis platform. And these three components you see on this chart. We, as Immunet, are proud to have Asset Profiler as partner, but also to have won over REFIRE as a new strategic partner. And we look forward to this cooperation in order to achieve this higher market efficiency and transparency. And this can specifically done, I think this is an important point, when talking about digitization, which we haven't mentioned with the state-of-the-art business intelligence. Immonet, for example, has got data, not transaction data, but offers on the buy and on the sell side for just about a decade. And so when it comes to valuation issues, when it comes to the design of new apartments, which is important to developers, when it comes to rental increase assessments, this is actually a very valuable database, and we try to unlock the potential together with the two partners, REFIRE and Asset Profiler.
Perfect.
Thank you very much, guys.
Thank you.
Ken, over to you.
Thank you.
Please promise me you don't have a video.
No, nor slides, and I'll be a little bit more succinct. So Auction.com is an online marketplace for real estate, and unlike most internet platforms that use the internet for a bulletin board, we actually conduct our transactions, our sales on the internet. And we do it eBay style. Is everyone familiar with eBay? Either they've used it themselves or they've seen someone else use it. So we do a 60-day marking period, and it's a similar process if you would buy a property the conventional way. You register with us. You don't get to see any information until we vet you, know the customer, go through the normal type of checks. There's an asset advisor involved that will answer your questions, arrange property visits, and the documents are facilitated by being posted in a secure data vault. So we complete the marketing period, and that's followed by a 2-day internet eBay-style auction where it's open to the people who have registered, and everyone gets last look, and everyone gets last look continuously. The one minor difference is that eBay ends at a certain time. Our auctions don't end. If there's anyone who bids in the last 2 minutes, then we add some overtime. So everyone has ample time to pay more than anyone else. So instead of getting an off-market deal, what we pride ourselves on is that we get the market. If not, we get a higher price in the market. Because the more people you have looking at the same type of property, put them in competition, and we only differentiate in one thing. We don't discriminate on anything but who pays the highest price. So the record we had for the most number of bids for a single asset was 861. And because we add 3.5 minutes of overtime, if anyone bids in the last 2 minutes, it went to 4:30 in the morning. So auctions only end when there's no more bidders. So Auction.com started in 1990 as a commercial auction house, went dormant in the mid-90s when the real estate markets recovered, resurfaced in 2006 starting on the single-family side in the United States. We went to the internet in 2008 and started the commercial division in 2009. Last year we sold $7 billion of real estate, and that was equally split between single family, that was 28,000 homes, all done individually, and $3.6 billion of commercial real estate. And that was $2.6 billion of actual properties and $1.0 billion of notes. So we do both notes and we do real estate. Volume is up significantly this year. In December, we have over $3 billion of assets which will be auctioned off. We've done things very small, and on the large side, we have gone up to $73 million, and everything's done the same way. People do the due diligence, they get vetted before they're allowed access, and then it's clicking on the mouse, paying in competition with anyone else who has registered for that asset. In terms of marketing visibility, we get 1 million visitors a month to our website. Of those, 175,000 are on the commercial site. And interestingly enough, of the people coming to the commercial site, half of them are new every month. So when you sell a property to a conventional way, a broker will go to the typical buyers. We go to everyone and constantly mine the market for that local buyer or the institutional buyer or the cross-border buyer who will pay more than anyone else. And this is supported by a $40 million media campaign where we advertise old school in the newspaper, direct mail, postcards, and then in new media, e-commerce, social networking, banner ads, Emo Scout, Emoblin, the whole works. We have 1,100 employees. The company is based in California. In Europe, we have offices in London, Frankfurt, Berlin, and we just opened a Madrid office. We're operational in Germany at this point only, with Spain our next target. We started in Germany last December. We have our third auction this December with 46 properties on the internet. Welcome to visit them, a bit away, and from 11 different sellers. So we have had very good reception. In terms of our commercial platform, and commercial includes multifamily, we have more than 200 institutional sellers. Almost without exception, anyone who uses us, they come back for more. And what they tell us, at least in addition to liking the process, which is very transparent and open, they just feel that they get higher prices. And ultimately, what are sellers looking for? Best execution, the highest price, and that's what our sellers tell us that we do. Now, you can't scientifically prove that because you can only sell any piece of real estate once at one point in time. But the people in the trenches who are clients seem to say that we just get higher prices than their alternative methods.
It's Ken.
Yeah.
So how does the due diligence process work?
Pardon?
How does the due diligence process work?
So we have the information uploaded into the data vault. If you're interested, you would have to register, get the name, disclose information about you. You talk to one of our asset advisors to qualify that you're a real bidder, a real participant in this, and then we give you access to the due diligence information. We will arrange property visits when you're ready. So you can see the asset. And if there's further questions that we can't answer, we then go back to the seller and see if we can get that information. The type of stuff that's in the due diligence vault would be similar to what you would have in a conventional sales process.
That would include technical due diligence.
Exactly. And all our sellers are institutional, and they know what is standard and appropriate to sell a property. So if they're not including something that adds uncertainty, they're not going to get the price, so they're not going to get the sale, and it's not going to happen. And the people who use us, pretty serious sellers, so they engage us seriously, then they give us the stuff that's necessary for you or someone else to buy the property.
What are the costs involved in buying a property?
Yeah, that's a great question. So we don't charge the seller any fee. There's no administrative fee. There's no marketing fee. We just charge a buyer's premium at closing. And it's 5% for the first X number of million of euros, and then it goes down as the asset increases. And from a seller's perspective, whether we charge 0% or 100% really is indifferent, because if you're going to spend, let's say, 2 million euros for a property, and we charge 100% fee, which you would argue would be kind of high, you would only bid 1 million euros and then end up paying 2 million euros. So from a buyer's perspective, you're going to pay what the market is. And whatever the fee is, you're going to incorporate that into your bidding process.
So say that again. 5% on how many million?
Yeah, 5% on the first. I take that back. It's 5% because we're generally dealing with smaller properties, so it's 5% buyer's premium.
So out of the properties you got listed, was it 46 or 64?
It's 46 for this auction, and it's 14 residential, being multifamily, and the rest being commercial. Office and
how many are coming through Hatfield Village situations, and how many from other potential sellers?
I don't know that offhand, but with 11, is it evenly distributed? I have to do the calculation, but we have 11 different sellers.
But so far, most of the properties that you've offered on Auction.com have come from Hatfield Village situations.
Yeah, in this auction, that's not the case. Yeah, so we began with our strategic partner, Hatfield Phillips. And as time has gone on, we have branched out and have added assets from other sellers, which include public German real estate companies, listed companies, banks, opportunity funds, other special servicers. We have a pretty good following. And we're able to do that because people are looking for alternatives, given the state of the German real estate market in smaller areas and smaller properties, and also because of our historic relationships with many of the sellers in the U.S. So we don't disclose the names of our buyers in any particular auction. We don't advertise that. But in terms of companies that have used us in the U.S. that have a European name, it includes Credit Suisse, Deutsche, Danske, Deskia, HSBC, UBS, RBS, and a number of other large European institutions. Some of whom which use us here.
Some people say that the auction model is only for the worst properties, that the better properties will sell anyway, so that's the last sort of hope.
Yeah. So that's a great question. So what comes to auction? If I say is do we get the worst? Is it adverse selection, or do we get the good stuff? And when we started in the U.S., we were predisposed to people would give us the lower end assets. And we're getting some nicer assets, but generally they're not what you call the premier assets. And it's because I think people are, have this view of auctions. And there's two views of auction. One is depression, dust bowl, liquidation, low end, you can't sell it. And the other, perception, the other endpoint is if you have a Picasso or you go into your vault and you get your Rembrandt, you would never hire a dealer to sell one of those. You go right to auction. So auctions work real well for excellent properties because you put people in competition, and they seemingly work well for things that are, so-so properties. So the largest asset I mentioned we did was $73 million. That was certainly far from distressed. It was a Class A prime office building in Glendale, California. And we have sold a number of what I call prime assets in the U.S. That works very, very well. The challenge for us in Germany is getting those assets. And RCA reported that assets above 50 million euros, there is neither a buyer broker or a seller's broker. It's just done direct. People know who the buyers are. They go to them direct, and they don't use an intermediary. And we're an intermediary.
And if I might step into that topic, especially from that Picasso point of view, which has been talking about, our feeling or our experience with the German market is that definitely properties 3 to 1 million euros of investment volume downwards, they work very well on an auction platform. We know from our scope of clients that properties 75 million and above are perfect for an auction. What is in between, our feeling from the German market, as people don't want to show what they put on sale, people don't want to show what they're looking for to buy. So properties between 5 and 35, 45, 50 actually go on a closed platform.
Yeah. If people want limited marketing versus broad exposure, we're not the platform. So people really have to buy in. If you get more eyeballs and more people looking at an asset, you're going to end up with a better price. So if you don't believe that philosophically, then Auction.com is not really good. But it could be good for the buyer, because if you think most buyers are not going to participate that way, then you can get better deals.
So who are the buyers in this process? I mean, are we talking institutional buyers? Are we talking high net worth individuals?
Yeah.
Who is it?
Yeah.
Well, from our scope of clients, it's a broad variety of family offices, high net worth individuals, fund companies, open-end fund, closed-end funds, very many corporates, as a matter of fact, pension funds. So it's a pretty broad variety. Even developers looking for properties which need to be developed, which offer a certain potential. And especially in the cooperation with Immonet, we have the positive experience of reaching more high net worth individuals in the scope of investment volumes starting at 2, 3, 4 million up to 10 million, because the team which is behind Asset Profiler comes from the institutional business. So our network, when we started Asset Profiler in 2011, was more focused on the institutional market. That has expanded now thanks to the cooperation with Immonet.
Yeah, we have.
Actually, I have a question. What are the asset values for an asset profile?
The asset values?
Yeah, the values of the assets you have in the
Yeah, the sum of the assets it's roughly below 6 billion euros.
And the average size of the specific
the average size currently is 7-point-something million euro, and the scope is between 3 to 4 up to 35, 40 million euro per asset.
Okay.
Actually, I was going to add that a surprising high number of searches are being made on Immonet with a volume above 1.5 million. We ran a search on that with our business intelligence, and it's in the 10,000s each month, which you'd normally not expect with a B2C, primarily B2C platform. And so this is something that works very well, this lead generation on Immonet, for either starting transactions on an open platform such as Immonet, or moving, if more discrete transactions are required, moving to our partner asset profiler.
If I can comment on the buyers, it was similar to the ones that you mentioned. With the stratification being as the assets are smaller, it's more local entrepreneur, and as they get larger, whether it's the $5 to $7 to $10 million range or your range, it becomes much more institutional. We've sold a lot of properties at 20 million and above, and there you get the institutions, often with the local guy who normally would not have the opportunity to bid because brokers generally steer things to institutions versus a one-time or one-off buyer.
Look, I'm conscious we're running out of time here. If there are no obvious other questions from the floor, I'd like to just summarise. When I became the head of research at a company called King & Co. in the early 80s, remember King & Co.? Perhaps not. They're now part of the JLL behemoth. I inherited a card index full of data. Remember card indexes? There were trucks of the bloody things. I didn't know what to do with them. At that time, we were at the formative stage of property research, the formative stage of thinking about data. We would have taken our arm off for a system like this, or like this. Yet, much as we would have done that, and much how wonderful these systems are, they're also part of the problem. Because data is actually the very core of the business of everybody in this room. The fact that we treat it differently, the fact that we set it to one side, the fact that we have a session about data specifically, keeps that apartness. It's actually a core strategic decision what you do with your data. Data is the currency of innovation, and it's the thing that drives it forward and drives the markets forward. And if you think that's funny, it's going to be hilarious when, over the next 5 years or so, we start to get data from building management systems, and we start to be able to evaluate buildings in terms of their day-by-day, hour-by-hour performance. How are we going to cope with that? Are we going to have an IMONET for that? Or are we going to be building that into the core of our internal business systems? Thank you very much for your attention. Thank you guys for splendid presentations, and thank you for the video. I really enjoyed that.